Okay, we got the recording started. Just want to make sure, kind of read this disclaimer, just make sure everyone understands, or whoever's watching the recording, whether it's a coach and students, subscriber or member, or someone maybe on social media, just to let you guys know, I'm not a financial advisor. I cannot offer any financial advice. This is not to solicit or persuade you to take any financial trading decisions. Trading ideas that we share is always for educational purposes. What you do with your money is very, very important. Always use risk capital and be very, very careful with your money. Okay. All right. I'm not going to read this the whole thing verbatim, but for sure. All right. So that got the disclaimer out the way. Let's go ahead and get started. Okay. As usual, we're going to go ahead and start with fundamental, and then we're going to go right into the charts and making sure everything that we see technically is lining up with the fundamentals. I hope you have your notes and also your notepad or paper, or also our trading plan sheet. So if you have your trading plan sheet for all of our coaching students who have access to that, you may want to go ahead and get that pulled up, print it out, or whatever. Okay, so let's go ahead and start for the week in terms of what we're looking at. Okay, so for tonight, Sunday, market opens about 5 o'clock. Don't expect anything other than just normal movement, right? And then we're going to get into London session. So let's look at London session and take a look at if we get into New York session. And it's typically nothing, right? It's just a typical Monday, which we call what? What do we call Monday? Trap day, okay? So that is trap day. So that means you want to get everything set up. For us, we call it setup day. Good point, Brad. So trap day, setup day. So whatever trade that you're in, you want to kind of get those managed, and you want to look for manipulations, okay? So other than that, from the fundamental standpoint, we don't see anything other than Australia having a flash PMI, and that will happen Monday evening. As you can see, it's about 5 o'clock p.m. at the close of the market doing a rollover. So nothing really spectacular happening, but it gives us some time, right? That's important. A lot of people think that the market's open, you got to jump in and you got to start pushing buttons. That's far from the truth. And everybody is part of my coaching academy knows we don't jump into markets. We allow Sunday and Monday to be our setup day, be our analysis day. Allow the market to finish its manipulations, faking everyone out, thinking it's going to go up, and it goes down, thinking everyone is going to go down to go up. Because of the market maker weekly cycle. The beginning of the week is trap day, the end of the week is trap day. The beginning of the month is trap day, the end of the month is trap day. And also Wednesday is the reversal day, right? If it doesn't happen on Wednesday, most likely it's going to happen on Thursday, but there will be a reversal point in the middle of the week. Tuesday, Wednesday, and Thursday is your largest volume, and where are your most activities? It's very, very important for you as a trader to make sure you understand the market cycles, the sessions, your schedule, your time zone, to make sure you are at your charts when you need to be and away from your charts when you don't need to be, right? So you got to make sure you adjust your schedule, your sleep schedule, your private schedule, if you want to have a successful trading business. If you don't, it's up to you, right? And it's up to you if you want to make more money than a doctor and attorney combined, but it's all up to you. And it's important that you adjust your schedule accordingly. Other than that, you're gonna be just like every other 90% of the traders out here losing, right? Because they're thinking it's a get rich, get quick, and they come in here and thinking it's a buy and sell, pushing buttons, and it's far from. Okay. Moving on to Tuesday. So Tuesday, we got a little bit more activity, right? So Tuesday and Wednesday and Thursday, a little bit of activity. So make sure you mark this on your notes. Tuesday, we're going to go right into Asian session. We got the Bank of Japan CPI year on year. Yes, you can expect a little bit of impact with that currency. So if you're in some JPY pairs, and we'll take a look at the JPY pairs, you can expect movements to happen right at Monday evening, around 12 a.m. Eastern time. This is Eastern time zone for me. Just make sure you're aware of the account for Forex Factory to your local time zone. So the time zone that you're seeing on my screen is not technically your time zone, so just make sure you're aware of that. This is Eastern Standard Time, okay? Going into London session right at London opening, 3 o'clock. We are definitely going to have some currencies moving during that whole London session, right? This whole thing right here. So expect to see some movements on Euro USD and then Pound USD. We got PMI, right? Price producer index. This is going to have some impact. So you want to make sure this is economic reports, right? This is just economic reports, and they're going to have an impact on both Euro and Pound. So whatever is getting set up on Monday, it's definitely going to play out or to be faked out in the real trend by Tuesday. Okay, so that would be for London session. And then right after we get into London session, we're going to right into New York session, and this would be the remainder of New York session. Okay, so whatever carry on from Euro Pound could be either trending or could be reversing. We're not sure, depending on what currency it's paired up, which is important to note that right about 9:45, we're going to have reports for flash PMI, right? And that would be a report that's going to be impacting the economic report for US dollar. So you want to make sure you're aware of that. And then in about the afternoon, but by that time, it's pretty much dead. But you got NCD, right? CPI, this is the inflation report. But after that, this is Asian session. So I know I squared off this New York session, but this is Asian session. Asian rollovers from between 5 p.m. Eastern time to 6 p.m. Eastern time. And then we're going to right into Sydney for a couple of hours. And then we go right into Tokyo session, 8 o'clock. So we basically just called it Asian session. So right about 7:30, expect to have some volatility and impact on Australia currency at the same time. So even though New Zealand dollar happens about 4:45, expect both of these currencies, right? These are like twin brothers or twin sisters. They're going to be following each other. So the New Zealand dollar and the Australian dollar is basically going to be going basically in the same direction. All right, that's the tip. But this is inflation data, CPI, inflation data. So this will move the currency on Tuesday. Heavy Tuesday, just based on that. And we're not even talking about bank rate decisions. Because CPI, as we all know, because of the state of the global economy, we are in a global inflation. Every single country is suffering or having some type of high inflation. You know, we got eggs costing $10 for like, you know, a 24 pack. We got gallons of milk damn near costing $5 in the US. So I can only imagine which the inflation prices are having an impact in your country, whether it's Australia or Canadian or Europe. You guys know how that works. So this year, CPI, it's going to have a significant impact on the market. Okay, moving on to Wednesday. So we got Wednesday. So make sure you mark it on your calendar. We got Wednesday. It looks like not much is happening during the Asian session, right? Not much. So you can say whatever's happening on Tuesday is basically going to be continuing on Wednesday. The normal ebb and flow, nothing crazy or radical, sharp 50, 100 pip, 200 pip in one direction. A lot of ebb and flows, pullbacks, things like that. Okay, now we get into New York session. Now, this is the big boy. This is the Mike Tyson, the big elephant in the room. This is the bank rate decision for Canada. Yep. So whatever has been developing on Monday and Tuesday, if you're in a trade, you may want to go ahead and start tightening it up, taking profit. And if you're waiting to get into a CAD trade, this is the day you want to get into it. This is the time you want to get into it at 10 a.m. Okay. Bank rate decisions. So right now is at 4.25%. Or it's thinking about going based up about 0.25% quarter basis point. Okay. So of course, as we know, good interest rate is always good for the currency, right? So this is what we're expecting fundamentally. We expect currency for Canada to be strong. So whatever's been going on with Canada lately, as it's been beaten up, and we'll see it on the charts, right? So Canadian dollar has been just like beat up, and then we've been seeing that on oil as well. But we can expect to see a strong strength currency fundamentally. But let's make sure when we get to the chart, it also technically plays out fundamentally. And then of course we got oil inventory every Wednesday, oil inventory. So if this is Canada is really heavily related to US oil, do you think it's going to be a good time to probably trade oil? That's my guess. If you trade oil, that's the day you want to trade. And then you got the Bank of Canada press conference. And that's going to wrap up Wednesday, right? So this is going to be a big one. All your CAD crosses. Of course, you're going to have all your euro and pound be moving from the previous day. And of course, USD is just going to be kind of just ranging and ranging because it's waiting for the biggest news, right, of the week, just the biggest news of the week. So that brings us to Thursday. So Thursday, London session right here. London Asian session. Well, we got Japanese coming in with SPPIYY. Nothing major impact there, just a normal ebb and flow of the market, normal daily average range, nothing showstopper to be worried about on the Japanese yen currency. But when we get into London session, we do have, let's see, shorten that. This is London session. Nothing's really going to go on Thursday for London session. So nothing big there to worry about. New York session starting at 8:30. Now we're getting to a big deal. This is the GDP report. All right. So a lot of eyes is looking at GDP report for a lot of the fundamental reasons. Okay. So if you've been following the USD inflation, it is 2 data points that we're looking for that's going to impact the global economy, but also for USD economy, right? Come down to 2 things. It's very, very important to note this. Number one, obviously, is the CPI inflation report. Okay. The second thing is the advanced GDP report. To make sure or to confirm that the economy is in a recession, we need to have 2 things. We need to have at least a 20% reduction in the stock markets or the economy stock market. And we need at least 2 quarters, every 3 months, 2 quarters of negative GDP report. And so we already know that they've already stated during the last economic reports or the global meeting that they had a couple of weeks ago that they expect all countries, including the US, to have a global output GDP. Now, as you see here noted, we were at 3.2% last quarter. They're expecting it to go down to 2.6%. Okay. So if this happens, this could strengthen the dollar, right? Because low GDP means they're going to need to increase the interest rate to help the economy. And therefore, that the economy is going to have an impact on what we call the stock market, right? So that can hurt the stock market, the GDP, the company's not growing, things like that. And we can expect to see something happening on that dollar. But again, this is fundamental, and what fundamentally should happen does not always happen, right? So it's market makers. This is the market makers trap. They always hide behind news. They'll pop out and do what they want to do. So we have to be on the defense end as market makers, not be on the offense end, meaning you need to jump in thinking that you can guess what the trades is going to happen or what the market is going to happen ahead of news. We do not predict or trade news. We do not predict or trade news. We use news to give us a timing effect of what we expect and when we expect to see an action on that particular currency, okay? And then whatever plays out in the charts is what we play. We trade what happens on the charts, not what happened fundamentally. Okay, now, and then that's gonna finish off the rest of the New York session with home sales, which they are expecting, right? About 10 a.m., they're expecting a reduction in home sales. We'll see. Right. And then Tokyo will have core CPIs year on year, and that's going to finish off right after the rollover. And then we'll finish off, we'll start off the Tokyo session or Asian session with some import prices, yellow folders, nothing big there. Okay. Finish off to Friday. Friday is what day? Yep, trap day. Just mentioned it, right? It's trap day. So whatever happened on Friday, you want to make sure you're set up to either exit out the trade or get ready to exit out the trade on Monday. If you do get into a trade on Friday and roll it over on the weekend, it's fine, as long as you're in a long-term trading plan. But if you're in a short-term trading plan, you're scalping, whether you're on a 5 minute, 15 minutes, or less than 1 hour, and you're looking for 20 to 30 pips, it's probably best to go ahead and exit that trade unless you want to flip that short-term scalping trade into a long-term intraday or swing trade. So I always suggest, and I always coach people, that if you're scalping, you want to be aware of your long-term higher time frame analysis, right? So that you know when you get into a scalping, or you're scalping with the trend or you're scalping counter trending, right? So if you're scalping counter trending and you end up on a Friday, you may want to get out that trade, even if you have break even or a small loss, and just kind of basically go ahead and reset the Sunday, unless you want to go ahead and play it out. Begin, if you get into a bad trade, if you're one of my coaching students, I trade and coach you how to be a profitable, imperfect trader. Let me repeat that again. So if you're one of my coaching students, and in my coaching academy, I coach and teach how to be a profitable, imperfect trader. A lot of people think you got to be very perfect, you got to have very low drawdowns, or you got to be very high accurate with your entries, with very good setups in terms of, risk rewards and blah blah blah, and everything else that they teach you in the forge land of informations of gurus and YouTube. Yes, that will work for some, and it takes a lot of pain and a lot of years of learning how to be that freaking damn accurate, right? That's why a lot of people fail platform, because you can only have about a 3% or even a 5% max drawdown. Wow, that means you got to be in and out and don't even think about carrying trades over the weekend, right? To try to be a profitable trader and get 10% within 30 days. Whew. And then to get 10% return, hell, you got traders out here trying to get 10% return in a year, right? Trying to average 1 to 2%. But I coach you and teach you both ways. Well, we trade both. It's not to say that you can only try to trade risk rewards. Yes, you can, and you just have to understand the rules and the game and understand the principles of it. But if you're trading your personal account, a lot of people think you have to be perfect. You have to have a high win accuracy. You have to have a high risk reward. You have to have a high or a low drawdown or a high bank account. No, you don't. You can actually trade and be profitable as an imperfect trader. Now, that's not to say you're not going to go through some emotional challenges. Right? That's not to say you're not going to go in through some disappointments. You're not going to go in there and see all red on your accounts and go, oh my God, I'm losing, because you're in a negative drawdown. It's really about understanding the game of how you can actually not have to stress about putting a stop loss on every single thing and be so damn tight to make sure you have a risk reward of 2 to 1, 3 to 1 risk reward if you don't get in the trades or blah, blah, blah. But it's really about learning that you actually can relax and not have to worry about being a perfect trader and still be profitable. Okay. All right, so that finished off the fundamentals, and let's get ready and go right into a charts. We're going to go ahead and start and lead right into the dollar index, of course, right? So make sure I switch over, make sure you guys type 1 in the chats. If you guys can type 1 in the chat, let me know you guys see my charts. I want to make sure I'm on the right charts and not on the wrong chart. I've done that before. All right, thank you. Hope you guys are taking notes. You guys are taking good notes? Yes? No? Why? If you can, just let me know you are taking notes. Let me know you are doing something. However, this is going to be recorded, of course, but you can always go back and watch those and take those dates just in case you miss a couple of notes or a couple of things that you wasn't really clear on what I just said. Sometimes I tend to talk fast, so I'm trying to get this done within an hour, right? No pun intended, but I always extend more than I want to. But I'm trying to make this short and sweet and to the point. Okay. All right, starting with the dollar, let me get off my rambling. Okay, starting with the dollar, this is the dollar index. We're looking at the daily. Let me start with the monthly real quick, because this is the top-down analysis, right? We had the historical dollar here, dollar index way over here. right? And we had the extreme high back in 2016, came all the way down here, 2018, came back at equal high back in 2020, March, and then we had the COVID situation, and we came down to 2021. We were done with the monetary easing, and then we just started racking up interest rates, 0.75 points, 7.5 points right here. I got coaching students going, oh my God, Leonard, this is going through the roof. Should we sell? Why are we selling, right? And then all of a sudden they sold, and then they was like, okay, well, let me just kind of shut up. Maybe it was kind of like, just kind of feel, scared. I've never seen this before, blah, blah, blah. Right? And we came all the way back down, and all they had to do, right? So this is a perfect example. You got into a trade right here selling because you think it was going to be a triple top from this and this, which would have been a right trade, believe it or not. It just happened to go further. And then all of a sudden you get into another trade because you're trying to cost average this thing, and then you got into another one, and then you start to crap in yourself, and then your drawdown starts to go up, and then you start getting scared, and then you start saying, man, he wants me to keep putting sells, and sells. And then all of a sudden it starts to drop. Your profit there, your profit there, your profit there, your profit there, your profit there. Yeah, it probably took, 1, 2, 3, 4, 5, 6 months, but all of this is profitable. Did you win 100% of your trade? You did? Wait, I thought you said you had, how can you be a profitable and imperfect trader? You just said you just won 100% of your trades if you would have just held it. Would you just say the last piece? Oh, if you would have just held it. But to hold it for 6 months, that takes what? That starts with P. Patience. Impatient traders pays patient traders. Right there? Impatient traders pays. Look at that. Patient traders. So are you the patient trader? Now, if you can hold your trade for 6 months, yeah, that's extreme. No one's teaching that. No one's coaching that, because no one understands the markets and the ebb and flow of the market and how it operates, right? Everyone thinks this goes up and goes up and goes up like a stock and becomes Google's and Amazon. That is not happening. You got to understand the market's ebb and flow. You got to understand the market of the reactions. You got to understand the market flow. You got to understand the market fractal and how it operates, and understand how it fundamentally reacts and how it has an impact. You have this dollar go up to 140, 150. You know what that happened globally to the market? It'd be insane. Okay. All right. Very, very important. All right. So with that being said, let me go ahead and delete some of this. Oops. Frustrating, trust me. Holding it that long? Oh, by far. Oh, waking up every day for 6 months in drawdown to hold that trade to be 100% profitable and not lose a single cent? Frustrating, but it's profitable. Didn't say it was going to be, easy. Just said it was going to be profitable. Okay, so we have done all the way back to basically 50% of this move right here, right? Now we're in a little bit of quandary to where we're going to start seeing some reaction. Why is that? What do you expect? What do you think is happening right around this area? Hello? You don't think that's going to have a psychological effect on people? Of course it is, right? We're supposed to see some reaction around this point. This is a psychological factor here, right? We don't know if we're going to go up. We don't know if it's going to go down. Is it going to go down? Well, how much is it going to go down? Or is it going to come back? Is it going to retest? Is it going to come back and fill this gap? I mean, what's going on, right? So you have to be able to be aware of what's going on in the market and how it impacts, and knowing that if you're at the top of the market and see if it's going to be, if it's oversold, wait, it's oversold at this. You see that? It's oversold at this location. Not here. It was way over here a long time ago. We're coming down. Red, it's coming down. This is the monthly. Let's look at the weekly. We're in bearish territory. Let's go down one more time. We are grounded in the daily, in a downtrend, in a monthly downtrend. We are over, basically, the market is oversold, exaggerated in a downtrend. In a downtrend. We're in a downtrend in the higher time frame. What does that mean? Right? You got to make sure you understand that, how that impact you. So here's the thing. This is going to pull back. We got to have some ebb and flow pull back in a downtrend. So this is going to pull back, right? The thing is, how much? How much is going to pull back? It's going to pull back here. It's going to pull back here, here. Where's it going to pull back? So here's the daily, and I do have it marked up because we're here at this critical area here. Really, really funny here. Look at 1, 2, 3, 4, 5, 6, 7. Okay, and we got an order block sitting right here. So my software is painting this order block right here. Plus we got another one here. So which one is it going to come? Well, most likely we've been in this downtrend for quite some time. We need to see what is going to happen. Now, of course, I'm going to say I'm bullish short-term, bearish long-term. So I'm thinking, right, it could come into this area and then we're going to come down, right, at this location. However, could it come here? Sure can. We can come right here, fill these two little imbalance here that I have marked as IMB, it could come down. So here's what I'm suggesting, because I am bullish, but that doesn't mean automatically push the buy. Now, if you're in a buy, that means you're just going to have to wait it out and see if it comes back and wait to come back. If not, you're going to have to start hedging or start cost averaging, right? We're at a key point where the period, monthly, daily, weekly low, daily and weekly lows right here about, we're about 101.55, okay? Now, the key point is there is a possibility that we could just come here, possibly here, before we go up. That is possible. So if you went into a buy here or a buy here already, and if you're in high lot size, you may want to just go ahead and get out. If you're in a high lot size, go ahead and take the loss and come back, because this one right here, depending on your account size, could draw you down too heavy, right? Now, I did say we do cost average and things like that, but we trade very, very small to do that. You just don't put heavy lot sizes. That's just rules and principles that I just mentioned earlier, right? Now, if you want small, then you can go ahead and say, you know what, I'm gonna go ahead and put another pendant here, another pendant here, before we can catch this bounce. Now, if it only comes right here, then did you win on a ball? Absolutely. It just come here. Did you win the majority of them? Absolutely. If it just comes right here, did you break even? Absolutely. Cost average right here. The break-even point. So there's so many ways you can win this trade, right? Of course, we're talking about the dollar, so that means it's going to be inverse correlated to the Euro USD when we see it. That means you should be looking to short. If you're shorting the dollar, you're going to be shorting. You're going to be long in Euro USD, but if you're looking to long USD and I'm bullish, then you're going to be looking to shorten Euro USD. But this could come down, meaning it can come up a little bit on Euro USD. We'll see. So what I would do is there's some things that you can consider. First of all, if you're not in this trade, wait. Just wait. There's so many things that's going on here. You're like, you don't know what's going to happen, right? I would just wait. Just wait and see if it's going to come here, or is it going to come here, right? So that means we're going to wait for a close. We're going to wait for the market to do on Sunday, Monday. That gives us 2 days. Isn't that awesome? It gives us 2 days. You just have to sit and wait. Not 6 months, just 2 days. What you're trying to see is waiting to see two things. Number one, you're waiting to see if the candle full body close this 101 marker. If you get a full body candle close, guess what? We are going here. and possibly here before we pull back. Okay, and I keep saying we're going to pull back because it's the more it goes, the more forces it's going to need to pull back to mitigate, not just only to this pullback of this imbalance here, but because of the way price reacts to momentum. Price gets away so far, and then it has to come back. Now, one of the template charts that we have is called a guppy wave. And when the traders gets away from the investors trend and gets away from the guppy wave, it always come back, right? It's like the kids. The kids get away from the parents a little bit in the park or whatever, or some amusement park, and then they got to come back. Come back, kids, come back. Don't get too far, right? The price can get away from you. So you have to eventually come back, right? So, and that's what's going to happen. So the point is how far it's going to come back. And that's what we call into our trading room. So that's what we're looking for, to see if we get a candle close. Now, if we get all of this, and this is all we get, and then we get this, or just a little bit, and we get a candlestick like this, and then all of a sudden we get the next candlestick right here, and it's look like that. That's a sign of rejection, that price is respecting this 101 and it doesn't want to go any further. And then we're going to start to see green start to pop up like it is around here, right there. And then we should see this on the stochastics or RMI or your RSI. And then we start to see this start the momentum pull back. The point is when. So you can wait, you can get in, you can concept so many different ways to get into this. It all depends on you and how you are in your trade. My goal is to give you what I'm seeing in the market, and your goal is to put into your plan that fits how you trade and how you want to trade. We have multiple positions, multiple ways to trade it. I'll give you the best way, the safest way, and I give you the most risky way, and I give you the conservative way, I give you the dangerous way, and I give you the most profitable way. There's so many ways you can slice it. You just got to depend on it. I know, right? It's so many choices. Just tell me what to do. Unfortunately, it's just not always that simple, right? A lot of people want it easy. I don't want to make it easy because I don't need you to be dependent on me. I need you to be an independent trader in your independent trading business. But I'm here to guide you and tell you, if you do this, you do that. If you do this, you do that. Just, you know, like a parent to a kid, not to say you guys are kids, but it's always, hey, Mr. Leonard Williams, trader, if I do this, what should I do? If I do this, what should I do? And then at the end of the day, you got to make your own decision. Okay, so that's where we're at with dollar for now. So it's still early to tell, to see which way it's going to go. I'm just giving you my bias. Short term, I am bullish to be long-term bearish. Okay, so I'm looking to see some reaction here. If not, I'm looking to see reaction here, and I'm going to see reaction there. Okay, I hope that was helpful on the dollar and give you some trading plan. But other than that, it's more like sit on your hand. Let's wait until maybe Tuesday to see where we're at. And of course, in our light trade room on Tuesday, we're going to be trading this. So we'll go right over this. And there is some really good things that go on as you get into the lower time frame, the 4 hours and the 1 hour and 15 minutes. We'll be trading this range just to look for a breakout and to see if we get a choke, which is a change of character reaction using smart money concept to get us our confirmation. Okay, that is the dollar. Let's go to the inverse correlation, starting with gold. Okay, so a lot of the traders are in gold thinking, hey, this thing should be going back up, you know, as much as we would like it to go at 20s, you know, 2000, which is historically recordly high. As much as we want to go, oh, I wanted to go there too. It's just not going to happen right away. Not with some type of mitigation. There was a lot of sellers that got left out of here. That's the reason why we have imbalances, because sellers was kind of left out of the game. So they got to come back and at least mitigate some of these positions because of how fast they moved the market up on the dollar. Right. Of course, this is inverse correlated to the bond, which is inverse correlated to the US dollar. Now, right now, we are just poking up the high. There isn't an order block sitting right about 1950, let me say between 1944 to about 1953, 1944 to about 1953 on your charts here on TradingView using Orlando price data. That is the zone for this little minor order block. This is the major order block. This is like a big magnet, and picture this like a small magnet, right? But there is a bigger magnet down here. So we got two forces. You got a supply magnet, which is the supply zone, and then you have a demand magnet. If you can picture it that way as an analogy, and we got some little small minor magnets, you can see how the forces are playing in between us. But if you were to think about it fundamentally, and if we're thinking that the Fed's going to be increasing interest rates next week, not this week, but the week after on February 1st, that could potentially strengthen the dollar. We got GDP report coming out this week that could potentially strengthen the dollar. And we got a market on gold that's pretty much oversold. It's very, very saturated here at the supply zone, right? So we're pretty much at the top of this freaking range. It's more like, okay, when? We got some imbalance here, we got an imbalance here, we got an imbalance here. At when and where, right? So we got to be overbought. Sorry, thank you. Overbought. So we're in overbought with a lot of buyers in here, and we're really oversaturated here in this market. So the market it's stalling, right? So it's not pumping. It is stalling. We got one market up, and then we got one candle going down, right? So this is on the daily. We are close. So could this pop up and pop up here and pop up a little bit to kind of induce traders and kind of get you to be scared, to say, hey, I need to go long if you're in a short. But most likely us, we're already been bearish since I've been talking about this market last week. But retail traders are saying, man, I'm holding my long. This is going up, just going up. And they may have buy orders sitting right here already from this market here. I got pending buys sitting there, who knows? So they're looking at this and saying, hey, I'm gonna catch this move. This is going up. This is going to go high. This is going to go to 2,000 record high. I can't wait. I'm gonna make sure I get part of this because I missed this. So they don't want to miss this, and market makers know that. So they're going to induce traders and get traders to look and say, hey, we're going up. We're going up. No, we were going down. No, we're going up. No, we're really going up. Right? So you can think, get you to fake out. You have to be biased to your trading plan and be confident to say, hey, what's going to happen with this market? So I'm bearish on gold. I don't care how much this thing pop up. If this thing pop up, I'm waiting and I'm waiting. Or I'll load my shorts and I scale in my shorts, waiting for this thing to drop. Okay. It doesn't need to drop far to get me out of a trade. It just needs to get me low enough, right? However, I do potentially feel it is going to come low, and it's going to come to this magnet first before it goes to this magnet. Okay. That would be natural, right? It'd be nice. It could come here. However, it can come here and then go up. It can do anything at once. So I am looking for gold to drop at any time. It did reach a high of 1935. It could go as high as 1944, not to say it can't, but if it does, hopefully you didn't trade big. But if you're scalping this, you may want to wait for the candle close above 1935 if you want to buy this, right? And no, like you got a candle close above this 1924. Hopefully you took this trade right here and got out of it, because look, it came all the way back down to your entry. And if anything, you're in a negative at one point before you finally got into a break even. You see how that can trap you? So either you're waiting for a break of 1935 to catch this small move to 1944 to possibly 1955, or you're going to play into a short and put a pendant up here, or wait for a close of 1935 before you decide to short this thing, if that's what you want to play, which I think most likely is going to play in that order. Okay, so in our live trade room, we'll be watching this. This most likely probably won't move a lot until about Monday. Monday we'll see exactly. It's, Monday's kind of a trap day, so we'll see exactly what's going on. But Tuesday, Wednesday, and most likely Thursday for sure, we are definitely going to know where we're at about the market. Okay, so that is the dollar. Let's look at S&P 500 real quick, because this is the overall stock market that also leads US 30 and also now 100. So in other words, if you can trade S&P 500 and follow it, then you know exactly what's going to happen with US 30 and NAS 100 in the long term. Short term, they act a little bit different, so you have to be aware of what you're trading. US 30 moves really, really fast. S&P 500 and NAS 100 moved a little bit slower, but over on a longer time frame, they're pretty much mirrored, right? Okay. So real quick, just looking at the daily, I have this trend channel here because it's actually following this trend channel. Not to say I'm trading it, but I'm recognizing the pattern, and I know how this is playing out because you want to be aware of it when you see a flash like this. It's kind of clear to say, okay, hey, this is a channel. Okay, when it gets here, I'm a short it. When it gets here, no, I'm just trading. I'm putting this here because I want to see how it reacts to that area. Okay. So let's zoom in real quick, and basically nothing has really changed, okay? And what I mean by nothing has really changed is in terms of my market here and bias, I'm still bearish on the indices. I'm still bearish on stocks. I do believe it's going to come down to this particular area, right? High probability in this area first, which is around 37.97. I believe, I'm sorry. I believe bearish is going to come down to 37.64. This is what I'm looking for, right? Unless it breaks out of 4,000. If it breaks out of 4,000 on S&P 500, then I'm looking to see it goes here, 41.41, and I'm looking for it to hold and go higher. That's a low probability scenario, in my opinion, based on what I'm seeing, based on what I'm hearing in the fundamentals, based on what I'm seeing in the fundamentals, and what I'm expecting from the dollar. Okay. Now, obviously, if the dollar gets weaker, this is going up. This is what happened on Friday. We had this bearish movement down. Once it reacted around this area, had a hard time breaking this 4,000 mark, and then the market dropped, right? It dropped 2 days, boom, boom. And then on Friday, it went right back up to about 39.50, 39.58, but not quite 4,000. So it didn't come back up here. Could it come up here? Sure. But would it break is the question, right? So we got to look for that on S&P 500 because this is going to give us an indication of what's going to happen with the dollar. We got to see this break above 4,000 before we can say we're going up. We don't break this area, we coming down, Mary. That's it right there. Hail Mary. Okay, so we got this candle rejection, 1, 2, 3, 4, 5 days. Coming down 2 days. Got a lot of traders thinking we're going short. Monday may play this and then drop it again. So we got to be very, very careful. So that is my take on it. I am bearish. I'm looking for this to come down and break below this number right here, 39.24. That'd be a good place to put a short to trade it, right? They're not trading the lows. Trading the lows is here. Trading the lows is here. Getting the entry at the break of 39.23 for a short is awesome, or trading long for a break of 4,004 to get to this high is smart. Okay, so that's what I'm projecting right now. It's looking bullish, but overall I'm bearish for the mid short term to go long term, right? I do believe we're going to recover. Of course we are, but I'm looking for it to go down. GDPs to go down. Things like that, the FOMC rate decision to increase the dollar strength, and all of this is just going to continue to plummet this market. So it's going to be a kind of a recession scare, if you will. Okay, so that's how I'm seeing it on the S&P 500. Let's look into oil. No, I'll come back to oil because that's for Canada. Let's look at Bitcoin real quick. Oh, look at, I'm gonna move this up. It was right here, right? And then I was hoping to come down and kind of range a little bit, but Bitcoin just wants to keep going. All right. Bitcoin sitting at 22,000, or got as high as maybe 23. Awesome. So I think we're about as far as you need to go, right? Look at this right here. You see that? This is right there. We got a small imbalance. This is pretty much covered, but it's got a little bit more to cover, but we are basically at a double top, right? So I do expect this to come back a little bit down. And we do have a couple of imbalances here. Let me go ahead and point that out. We had an imbalance here, and I had this market here, and it was mitigated by this. But in the pursuit of pushes, guess what happened? It created some more imbalances. Now, imbalances doesn't always work very well when it comes to crypto, because crypto can give a damn about imbalances. But when it comes to the stock market, since it is a commodity trading on the Chicago Mercantile Exchange, it does react somewhat. But explain this imbalance. Explain this imbalance since May last year, right? It's been sitting there, hasn't mitigated nothing. It's going to eventually sometime in the future, just by naturality of the ebb and flow of this market. But I do expect to come down. So I am short-term bearish on Bitcoin, and I most likely will see it come down to about 1824. I can see that playing out, maybe playing in this zone a little bit. Right here, we got this little zone. Okay. So I think with the stock market, if we see, obviously this is going up because the stock market is really highly correlated with the stock market. S&P 500 breaks below this, which it had a lot of liquidity here. And if the stock market comes down, dollar gets strengthened, we're going to see this come down a little bit, right? I think we're done seeing these days. It's very high, unlikely, low probability we'll see this come down here. Will probably come down to as low as 18.6, 18.5, around that area before we shoot up, okay? But when we shoot up next time, we're going to go to about 24, 25, and then we should be at 30,000, okay? When? I don't know. When we break out of this little range, when it comes back a little bit, mitigate, play with the stock market, manipulate a lot of people, liquidate a lot of people before it gets back into a bull run, it could be the next maybe 2 months, 3 months. I would say this most likely will play into the Fed pivot. Fed pivot means when they stop raising interest rate, going into phase 2 and start doing an interest rate pause. That's when we start to see the Fed pivot. We should start to see the stock market recovery, and along with that for the dollar weakness, okay? So we'll see, looking for a short-term bearish, long-term bullish on Bitcoin. So that is Bitcoin. Okay, let's go into our currency pairs now. Start with dollar, and then we'll go to CAD, and we'll talk about oil at that point. Okay, so this is US dollar. US dollar is playing the same thing along with the dollar. Dollar, you know how dollar was down here, just inverse correlated. That's all it was. This is doing the same thing. It's playing with this area, right? We do have a little bit of support area sitting about right here. Right, this is a little bit, this can be used as a level, as a lot of the traders are probably using this psychological level here, just like they were using this psychological level here to go long. And then it came down, they got them break even, and then they're probably going back long again. So they got them thinking they're going to go long, they're going to go here, and they're going to go here, go here, go here, when they're not thinking about fundamentally that this could be a trap day. So could Monday be a trap day to go short, all right? That's what we need to see. So we need to see a break or reaction of level 1.0868. We need to see reaction. So all of my coaching students know what a reaction we're looking for. We're looking for a candle close break. We're looking for a break around here. And then we're looking for a nice bullish candle to stay above this candle close. Then we're going to go, most likely we'll go up a little bit, right? We may go here. For that to happen though, we all know the dollar has to be extremely weak for that to push all the way through, or go to about this level that was right here, and then come back down, okay? So let's wait until we see a break of 1.08 if we want to go long, short term, or if we're short, which I am short-term bearish, just like I am short-term bullish on dollar. I do expect to see some type of reaction to market reaction this week. We're going to break out of this range 1, 2, 3, 4, 5, 6, 7. Just look what it looked like on a 4-hour. Look at it. This is that range. Isn't that nasty? Right? So when you see this much reactions and you see the moving average just flying like this, we've got the yellow, got this little pink, orange, you got this white moving average here. When you see it fan hop up like that, we're in level 3. We're in level 3 of the market maker plan, not level 1, not level 2. Level 1 is when it's a reversal. We're at the level 3 of coming back to another reversal. We got a lot of multiple days M in here. And we definitely have some divergence. Look at, we got this market coming down. Thank you for pointing that out, Brad. We got the market coming down, and the market wants to come up. It's clear divergence. So in other words, anytime, folks, anytime, right? Anytime. Are we here there? Are we there yet? Are we there yet? Are we there yet? Oh, there we are, right? So be ready for it, right? That's what I'm saying. Be ready for it. Don't let the market pop scare you. Don't let the market pop fool you. Monday is trap day. We got imbalance sitting right here. We got imbalance here. A lot of traders saying, hey, what about, a lot of sellers saying, hey, what about us? What about us? You got forgot about us, right? So I don't know if this is imbalance or why this is there. So we got a couple of magnets here, a couple of order blocks to come down, come here, low, high probability, we're going to come about this area. And then we got a medium probability to come this area before we go along. So short term, I am bearish, okay? Anytime now, anytime. I don't care if this thing pop up a little bit, I'm willing to take a short to get a lot of this trade. I'd rather take and try to get 231 pips versus trying to get maybe 50 to 71 pips, unless I'm scalping. If you're scalping, yeah, absolutely. Do I think this is going to go to this next level here, which is around 254 pips? No. That was quick, huh? No. It could, but no, I don't think so. Not right now. We're going to get there. I'm more leaning on the 254 pips this way. But to each his own. Hey, I can't tell you what to do. I'm only going to tell you what I see and tell you how I'm going to trade it. Tell you how most of our coaching students are going to trade it. But put this in your trade plan. We're looking for a possible break of 1.08 for maybe a little bit of pop upside. But I'm looking for a target to come down to about 1.05, 1.05. So I'm bearish to go long-term bullish. Okay. Now, your USD, pound USD, what do we think for pound USD? Same damn difference, right? It's the same thing. It's got the dollar on the damn court, so it's currency, euro, London, they're right next to each other. So basically, they're very highly correlated with the dollar. Okay, sometimes euro is about 99% correlated to the dollar. Sometimes pound USD is 99% correlated. They just like brothers and sisters, just like Australia and New Zealand is to each other. Okay, this looked like a very good double top, very good M pattern. I can't say anything else other than it could go up. Yes, there is a little range here, this little order block range here. Do I think it's going to go way up here in this order block? We're in this order block already. To be honest with you, we're already there. So this is what the order block is. You can probably can't really tell in the shaded area. We're right there already, this whole order block. We're right at the edge of it. So could it come anywhere in this area? Sure. Sure it can. Sure it can. And then boom. Okay. At any time. It can do it now. It can kind of go up later. Probably think it's going to go long, and then boom, take you down. Okay. So that's where we're at with pound USD. There's a couple of imbalances here that I pointed out. There's small order block here that I'm looking for the dollar to play out. The strong order block here, these are lower time frame order blocks, but the strongest order block is about right here. So I can see that coming down. So I'm looking for, if you want to trade it long, you could if you're scalping this, but I doubt it. That means you would need to see a break of, let's see, you need to see a break of 1.244, which I doubt. I think it's going to play in this area. It may pop out a little bit, but my sources, my technical analysis, and based on what I'm understanding from fundamentals, I'm expecting more to the downside. I'm looking for a short-term bearish downside sell to about 1.18 as my initial target number one. Target number two will be down to 1.15, and this will be a nice 549 pips or potential 822 pips move. I like that one versus trying to shoot for something that it may not always go all the way here. Are we going to come here? Of course. Are we going to come here? Absolutely. We got a big imbalance sitting right there, staring right us in the face. So I do believe we're going to eventually see this. Okay, it's coming. But let's just, just understand this fractal right here in this trading range. We're about to see a little bit, but you know what? We're mean reversion traders. We know things just always come up. We'll play the pullback if we see an extreme situation. To me, this is kind of an extreme comeback to come back from all the way here to come all the way here. Naturally, it look like it'd be nice to come here, come up, or even come down. Okay, that's pound USD. AUD USD. AUD USD with the dollar being the quote side of currencies, same difference. I'm expecting AUD USD to roll back down. Put this right here. Now it could come up. We had this high. I had a little high right here. About 0.7060, and it could entertain that high. However, I don't see it going any higher than that. So in other words, this zone will be the area where I would see it's a strong supply area. Anywhere in this area you would want to short. Okay, that means from price now, where is that at 0.69 to about 7.076. So if dollar strength plays in, this is going to drop. And my first target hasn't changed in terms of high probability. I'm looking at for it to come all the way down to about 0.6673, and then we'll worry about the rest before we decide to go long. Short-term and bearish before we go bullish long-term. NCD USD, nothing changed here from our last analysis other than I just move this over and I move this over. NCD kind of creeping up. We had a high about 0.6598. Don't this look like pound USD? Kind of does. I don't care. All I see is a double top, and I see a M pattern. For me, I think on a higher time frame, that's pretty accurate, especially when I see a lot of the levels starting to play into this level here. Let me know if you guys agree. These are liquidity. These are liquidity. Okay, so I'm short. Bias, meaning if you get into a short, just don't let this long scare you. Don't let the pop scare you. What's the next level after that? Think about it. Okay, this is our next order block sitting way up here in this zone, and then we got a strong one here. So these are strong order block, but this is a bigger order block magnet down here as well. Okay. Yeah, about 0.7. 0.7 as well. 0.7 is just way up here. This is 0.7. So this would be 0.7. Up here would be 0.67. Okay. So long term, to get up here, that's 222. So about 0.67. And then go from there, also from the bottom to the top is 503 altogether. So from here to here, it's going to be about 222 pips. And then from there to there, it's going to be another 273 pips. Are we going to get there? Yeah, I believe so. Not right now. I do expect to see a little bit of mitigation. I don't think this is going to be that strong enough of a weak dollar. I mean, that strong enough of a New Zealand dollar and a weak enough dollar to see this go to 211. Could it? It could. And if it does, it need to be breaking above the 0.6518 before I can say, yes, it is. But as of right now, it hasn't confirmed to break above 0.65. So if you want to wait, which is a good thing, just wait to see if this is going to break 0.65. We'll get a candle close above 0.65, then and it holds, then it's definitely going to go to 0.67. But if it doesn't and it stays along and it plays around this little area and it starts to manipulate you, then most likely we are definitely going to come down to 0.62 is where I'm having as my target, 0.62-ish. 0.6266. Okay, that's New Zealand dollar. Okay, moving into US CAD. All right, US CAD, what did you do? You didn't go up like I wanted you to. Oh, it sucks. I'm gonna go ahead and move this over. Okay, now I was expecting it to come here and then have the CAD strength play it down. But since CAD is getting ready to come in on Wednesday, I don't know. This is going to be really, really interesting. So I was hoping that the dollar would have pushed it up here and then CAD strength pushed it down, but it looked like the dollar weakness is still playing in here. So with that being said, we got our fundamental news this week, right? So we're expecting CAD to come in on Wednesday with the monetary rate policy, and then we have the dollar coming in on Thursday. So at this point, right, I do expect the dollar strength to play into this. It could come up here, right? High probability, and then dollar strength. Could Monday and Tuesday play it out? And then the CAD strength and CPI data push this down, right? It's kind of hard to tell exactly what the market makers plan to do with price being at this level other than to get ready to play it either way. And what do I mean? So there's a small order block is at right here. This is what it did all week. 1, 2, 3, 4, 5, 6, 7. We went as far as here and then came right back down. So it did do the pop that I wanted to see, but it didn't go further enough before it came back down. So we need to see the break of this order block right here, which is about 1.33, okay? If we get a candle close break on that, we're going down. Okay, we get a break of this 1.33 zone, we're going down. And I can see it going down right here. Okay, which is what's right here, right? About 1.30, okay? But I need to see the break on that. So I'm not convinced. So right now, I'm more of a wait and see. So on US CAD, I would not take a position on US CAD until I see that break or until I see a rejection. I need to see the rejection. I see rejection on that, and I see it starting to come up, then we're going up, okay? But it's going to be hard to play this because the market makers, we got to see where it's at on Monday. So what did it do on Monday? Does it push lower on Monday or does it come up here? Because then Tuesday can come up here and then Wednesday push it down. So we could be in this range. So as of right now, I wouldn't push the sell button, right? I wouldn't push the sell button right here. Why? Well, I know I could see the CAD strength come in, but are we at the low or are we at the high? Now, if price was right here, I'll push the sell button, bank it on CAD strength, but I'm not going to push the sell button at the low. I hope that makes sense. Until I get a what? Until I get a confirmation break. then it would not be shorting the low. It'd be more shorting the continuation of the move, right? Because we came here, we came up. Could this be a break down? I don't know. I need to see the break. I need more confirmation, right? I'm okay to say, hey, I don't know. I'm not going to just push the sell button just because it looks low. I need to see more confirmation. That's all. If I don't see a confirmation and going up, I got more confirmation that it's going to go up before it goes down. So right now, I'm in a no trade on US CAD, waiting for the break on this. I think I'll have more information by Tuesday. Okay, so that was my suggestion to you. If you wanted to, I would definitely be a wait and caution. Put this on your watch list that says, hey, we need to see the break of this zone right here, 1.33, 1.331, 1.3324. If we see the break of that, I got the 200 sitting right here in front of my face, right? It could come right here, just like this right here. Get you to what? Go short. Well, you said a candle closed. I said, well, yeah, I see candle closed, but it also needs to stay below and not come back up like this, right? So if it comes down, it got a 200 moving averages. So I would say even around the 200 moving averages, I would need to probably wait, because that's another barrier of support that it could hold. Not that I traded 200, but because the market makers know everybody else does. So I'm aware of it too. So I need to wait and see what the market maker is going to do to all these retail traders to flush them out and get them liquidated so I can trade with them, right? So that's what we should do. That's my suggestion. Okay, that's USD CAD. Let's look at the oil real quick. If we see USD CAD, what do we think? Look, oil is up. This is strong. Oil's not down. So oil's up, that means CAD is playing strong into that, right? So that's why USD CAD was playing short. So that's why the CAD pushed this down. So if oil if oil drops, that means CAD is getting weak. It could play into this range before it goes back up, right? So I said it was going to come up. It did. Came up right here. So now I need to see the break on oil. If this breaks up, that means CAD's going to break down, USD CAD. That means that CAD strength is going to push up with this. And we can see oil come back into this range of $90. Now, if oil starts to weaken and it does not break this barrier right here of $81 per barrel, that means we're going to come back down to about 73. And that means USD CAD is going to go up. Okay, you got to be aware of that. Yep, no worry, Mike. I'll make sure I have this recording for you, and I'll see you on Tuesday. Awesome, thank you for coming in. All right, so a couple more things, and we're going to roll right off of this. Let's go into USD JPY. Yes, JPY is holding. Boy, you dirty dog, it's holding. Look at this nice trend. Let me get all these arrows out the way here. Boy, you got to get confused and get lost. Is everyone seeing this too? Or is it just me? Type one in the chat if you guys see this. Here, resistance, support, previous support became resistance, support, previous support became resistance, support, previous support became resistance, support. Look at this high lows, high lows. Are we in a downtrend? The fall of USD JPY, what is going on? So if this is playing out so nicely, we got to be aware of that. Yeah. We got an order block sitting right there saying it's possible. Would you agree? Got to be ready for that, folks. Got to be ready for that. Okay, so we got a bullish candle, right? So what we need to see here, this is what we need to see on USD/JPY, because I am bullish on USD/JPY, but I'm bullish short term for long term bearish. Okay, so this is what we need to see. We need to see USD/JPY break above 130.57. It reached it, came back down, reached it again, came back down, but this is looking in that channel, right? Oh, this is kind of a bullish candle channel, bullish flag channel. This is the channel, bullish flag. So this looks like it's going to break 130, but we need to see that, right? So I'm bullish. However, if you trade it, you want to look for the break of 130, right? So that we can go to about 132. If this does not break a 130, then this is going to be short-lived. This could happen, right? But if the dollar kick in strength, as we're expecting, then we can see this week, okay? And then once we get up here, then we'll need to see what the next reaction is. FOMC next week, Wednesday, not this week, coming week, February 1st, and then we got non-farm payroll. If that happens, dollar strength, guess what? Yep, most likely we'll see this, and then we'll come back down. Okay, so that's what I would say. Wait for the break of 130 to put in a buy or a temporary sell. We could be in this range a little bit. Okay, so this is a dangerous place for me. I am playing it into the bull, especially when you see this oversold conditions. Would you agree? This is kind of, I don't know if I want to short that. I shorted up here. I'll short it up here. I'm not shorting this. You do not want to short these areas. This is where you do not want to short. You don't want to short that, right? You can short it if it does this. That's a different story. You got a full rounded body candle close. You can short that, but we ain't got that yet. So I'm short term. I'm bullish. I'm looking forward to go about 132. So, but you can wait for a confirmation of 130.57 before it goes to 132 as well. Okay, USD/JPY. Let's go to EJ. EJ. Doing the same darn thing, huh? Got a nice order block down here. We got another one down here. This is a weak one. This is the main one. This is the one I want. Okay. Are we gonna go down? Yeah, we'll go down. But after we see some euro strength and Japanese yen weakness, we got some imbalance sitting right here that need to be mitigated. This is a small, weak order block, but this is a stronger order block sitting right here. So this is a nice bull candle. I love it. Could mitigate a little bit. That did take care of that imbalance there. Boom, that's gone. So I'm looking for a break of this particular order block. I want to see it go here to about 142 EJ. I'm bullish short term. After getting this area, I need to see what it does around this area, around 142 to this area, to see if it has enough to go 144. And if it respects that, guess what? We're going down. And then we're going down to 136. But right now I'm short term. I'm bearish just enough. But between the two trades, USD/JPY is a better setup. Okay. Pound JPY. Let's look at pound JPY real quick. Ooh, right there. right? So pound JPY, for this to go up, we do have a nice imbalance here. I like that. So if I need to see the break, pound JPY break 161. We see the break of this. This is going, folks. This is going to go about to 165-ish. Okay, that is a nice 434 pips. Okay, pound JPY. If this doesn't break and it stays around here a little bit, which it could stay around here before it breaks. Look where my candle was. This was here. It's going, but could it play around here a little bit before it breaks? Okay, so pound JPY could pull back a little bit and then go up. Okay, or it can come play in this range as well, meaning it can do this. So be aware of that. Okay, so I am looking for a little bit of Japanese weakness to play in for USD JPY, Euro JPY, pound JPY. Do I expect this to go up? It'd be more about Japanese weakness than it is about pound strength. Okay, so I am bullish short term. I need to see the break above 161. And then I would love to see that break and go up to about 165 as a target. Okay, pound JPY. CAD JPY. CAD JPY is going towards my target. We're still there, still playing out. It's almost towards the imbalance. Okay, so I see CAD JPY going about 98, 98.59 before we drop. Okay, and if you can see this volume profile right here, this is the bottom of the outliner of the volume profile. So I can see it come here and respect that. I don't think it's going to come way up here at all. I can see it come here, and I need to see the rejection on here, and then I'll be ready to short it. It doesn't really have a lot of reasons to come up here. There is some small imbalances. There is a big one up here. It could play in this, but definitely a high probability. Let's wait for this first to come here, 98.66. This is a nice little trade to come up to about 176 pips. So I do see it to come potentially about 98. If I see a rejection off here, then I'll be shorting it back down. If I see the candle body close on maybe the 30-minute, 1 hour, 4 hour, preferably the 30 minutes, 1 hour close above this area, then we're going to come here, but we'll wait for it to come here before we make that decision. Okay, that's CAD JPY. JPY, looking bullish. Short term, I'm bullish. I can see this now. It's starting to play out. This move was nice. This was a nice 158 pip move. Hope you guys caught that move when I called it. If not, what are you waiting for? Okay, if you did, great, congratulations. I want to see RJPY get it to about right here, which is my 50% area of my premium before I decide to short it. So from here, we probably got about another 126 pick move potential. I need to see it go to the previous weekly high of 91.82 and see if I get a reaction there. Right. So what the reaction I'm looking for is this. Okay. If we close above 91.92 and we hold it, then we're going about 92, 93-ish before we come back down. Okay, so short term, I'm bullish before I'm bearish. I don't think it's going to go. Could it go to this volume profile? It could, but it's right here at this bottom edge of the lower outer liner of the volume profile of the point value here. And if it looked like we're going to reach this area and play in this area first before we get here, I doubt if it goes here, go about right here, and then we go short. Okay, so I'm playing this into about 91 area before we even possibly see 92. If it holds, then it's going to go back down. Okay, that's RJPY and CDJPY. I'm looking for the same thing. Look at this move. It's just almost at my destination, about 73 pips. So if you took this move when I called it, you got, it was here. If you took this move, you got 276 pips. Congratulations. If you didn't, what were you waiting for? More confirmation? You're late now. Trade's not over though, but I wouldn't get into the trade now. If you got into the trade and you're holding that, great. You probably got a potential 76 pip move. We're looking for a hold below 84. If it breaks above 84, then we're going here to mitigate this area. Okay. And this area is around 86 to as much as 86.7, 88, 88, 86.8, 86.8, 86. But it's got to break above 84.72, 84.8. If it breaks above 84.8, then we're going. If not, we're going to come back down. Okay. Right now, I'm short term bullish, but RJPY is probably a better of the trade between the two. Okay. This is going to be more about Japanese weakness than it is about odd and NCD strength. Keep things I'm saying now. Just hope you pay attention on that. Okay. So Chef JPY. Chef JPY did very well playing into the zone. If you got into this trade when I called it, hopefully you got about 337 pip that happened on Tuesday that jumped up. So if you did, great. This trade is not over yet. It looked like we still got a little bit more ways to go, which is great. If you got into this trade and you're still in it, hold it, because you probably got about another 200 pip. If you get into this trade now, I've been thinking you might want to make sure you put into your stop loss as soon as you can. There is a little move to get about 200. But we may not get there. We'll see. We got a little small imbalance here, but this is where the volume profile is at right here. Just want to make sure I got my my meter right. Okay. Yeah. So the value add right here, the outer liner, we got the top, we got the bottom. This is right around that area. We'll probably get to this area, mitigate it. But if you don't want to get into it, then look to short. If it stays below 143, you can put pending orders to short around here too. 143.9, 143.5, 5-ish. This would be a good area to short. Again, folks, this is going to be your last chance to get into this trade for Chef JPY. Why? Because we're never going to see that again for a long time. Okay, so you still got an opportunity to get into the short. If you missed it up here and you wasn't getting into the short because you were all scared, all scared, just like it was looking like the dollar and stuff, and you was short, you were scared, you didn't want to short because you saw all this, you saw all that, and then you were looking at the historical high and go, oh my God, Leonard, this is going to the move, it'll never stop, and then it's coming back down, and you're like, okay, wait, hold on, let me sit down. Let me sit down and shut up and watch and listen, because I'm not paying attention. I'm thinking Leonard doesn't know what he's talking about, but man, maybe I was wrong. So I'm telling you, this is an opportunity to get into a trade right here, 143. You can short it now if you want to and still win. You may hold it for a week or two, but you can short it right now. If you say, I don't want to miss this, put a pending order here and get an opportunity here. But if you short it here, you're going to have to write it down for a little bit of a drawdown if you don't know where to go and you don't know how to point and click and don't want to wait and don't know, you don't want to miss this, and you hear what I'm saying, put sell if you want, put a light trade. If it goes against you, put another one, right? Either way, you're going to win this trade. We're going to come down here. Oh yeah, we're going to come down. We're going to come way down here. We're going to come way down here. This is, look how high that was. This is our target. 1. This is our target number 2. I don't know about target number 3 or target number 4, but I can definitely tell you it's going to come down to this area, okay? Sometime in the future, you want to be ready for that, okay? All right, so that's Chef JPY. Let's go through these real quick. Your odd, pound odd, your cat, pound cat. I'm expecting a little bit of more downside for euro odd. Again, I'm targeting in this area. It did pop up a little bit. I don't think we're going to, if it breaks above 1.57, then we're going to come back up to 1.59. However, I don't think it's going in that direction. I think it is going in this direction, lower lows, lower high, lower lows, lower highs, lower low, and then we're going to come back up. Okay, so unless if it breaks 1.57, then we'll go in here real quick. 1.5708. If it doesn't counter close by here and it rejects it again, I'll be looking to short it, which I would be. This is more in my premium anyway, long term, but if you're scalping it, that's fine. That was a nice little scalp up. I think we may not break that 1.5708. I think we're going to reject it. So I did that twice. I'll be looking to short it if it doesn't, break that. Okay, that is your odd, and I'm looking for it to come down to about 1.5. Okay, your odd, pound odd. Pound odd, doing the same thing, coming back, nice rejection, came back up. If it doesn't break the 1.79, which I doubt, 1.79, 1.8. Yeah, if it doesn't break 1.79, 1.8, it's coming down. This is target 1.71. Okay, 1.71 before we come back up. Let me go ahead and move this over. Because look what it did. It came down, came back up, and I think it's going to come back down just a little bit more. I'm going to keep that right there. Okay, that's pound odd. Euro CAD. Where you at, Euro CAD? Boy, CAD got beat up, didn't it? Just got beat up. Market is overbought. We're in extreme conditions, location. This is looking sweet. This is looking sweet. This is looking sweet. This is looking sweet. And there's no way in hell. I'm thinking it's going to come here anytime now. It will, but not right now. We're definitely in the premium. I would not long it right there as of right now, unless it clearly breaks 1.46. That's a bear candle. That's a liquidity point there. We got divergence pointing all over the place. As this thing start to drop, prices going up. Bring it down, baby. Drop it like it's hot. It's coming. Right here. This is a really good setup, man. You're a cat. I think it's at the edge right here. This is an edge trade. Okay. I see this coming down. This is a nice trade. Right where it's at now. I see at least 192 pips for now. And then potentially around 5. We may get 760 in the next couple of weeks. Anybody want any of this? Anyone? Tell me. I'll take it. All right. So this is a nice trade setup. I think this is actually going to drop. I think that CAD strength is going to kick in around Wednesday. I think this is going to be that movement. If you see it around here, it may pop up a little bit, give you a little fake out, might come here and test it. But think about it, folks. What's the next level? 334 pips? Oh man, that's got to be some extreme weakness in CAD. Again, we've already talked about it in CAD relationship to oil, so you can watch that. But I don't think it's going to break that. I think it just CAD's going to really give it some strength now, just like we saw it on the other charts. Okay. Other than that, I wouldn't be looking to buy it, not right now, unless I seen a clean break and you go, oh my God, I think CAD is that weak, right? And oil's dropping. That'd be a different story. Okay, that's your CAD, pound CAD. Ooh, nice. Look how it played out. Came here, bloop, came up here, right around that area. Nice. Nice. What's our next move? I'm going to take a guess. Like that. Yeah. I think so. Okay, so I am banking on that. We have a nice little imbalance sitting right here. This is daily, folks. There's a nice imbalance to the left there. We still got this imbalance down here that I think we're going to still come down and mitigate. Let's say so myself. Before we come back up, okay? So if it doesn't break 1.670, we're going to come back up here, right? So it could come back and it can come back all the way up here. It could. which is 1.68. If it comes up with 1.68, again, that has to be extremely weak to come this up here. I don't see that. Euro CAD is already up there. So Euro CAD is going to keep going while pound CAD is catching up. I doubt it. 152 pips. I don't think CAD has any reason to be up here. There's no mitigation to mitigate. There's nothing to mitigate. It was right here. You see this order block? We're there. I mean, that order block, we see this imbalance. That's mitigated. We got one here now. It created a mitigation, right? So we already got one rejection already. It's dropping on a full candle close on Friday. Boom, it dropped. It already dropped. It went all the way up here, got everyone thinking that it's going to go long, and boom, they got liquidated for 121 pips. Hope everyone caught that 121 pips on Friday. If not, catch more. More to come. Could have come up and fake you out. It could, but it got 378 pips. It's target number one for me. Definitely coming right here. High probability, medium probability. Okay. I'm bearish, sell, bearish. Pound CAD. Okay, your NCD, pound NCD. Let's take a look. Nice. Look at that. Oh, you awful market makers. Why you guys do that to people? I don't understand. Look at this. That's just pissful, awful. Really just killing people with that. Uh-oh, what did I do wrong? That's not what I wanted to do. Come back here. That's what I wanted to do. This is all liquidity. All this liquidity. You see the LG liquidity grab, that's what it says. Liquidity grab. It's telling you right here, even the damn indicator system is telling you liquidity grab, liquidity grab. Radar, liquidity grab, liquidity grab. Getting suckers, all right? All right, let's go down. We're coming here. We're going to play in this range a little bit. I don't like ranges, but that's the way it's going to play out. So it already dropped from this rejection. It already dropped 185 pips. If you got that, great. If you didn't, there is still a little bit opportunity move. I think it is going to come down to 121. All right, but NCD strength would need to kick in. I think it's going to be more about NCD strength than it is about euro strength. No, I think it's going to be more about euro weakness than it is about pound strength. But there is this range here. However, there is a potential that we could get up here. If you would, I'll be short-term bearish. That means I would take a short here. If it comes up against me, take another short. I don't think it's going to break up here. Not yet. Not yet. I think we're in an overbought conditions, or we were. We need to come back down. Okay. So if I was to put up here, you see, this is a premium, this is the discount. It's not that 50%. I don't know if you want to short that, but there is a little bit more room. You do have a little bit. I'll go like 200 pips, but other than that, it's right in the middle. You should have shorted up here. If it comes down here, then longer. Different story. Okay. How about pound NCD? How's that looking? Oh, we had that nice little flag, huh? And it broke out of that flag. Oh, that was dirty. Broke out of that flag, came up here, came up all the way to the liquidation area over here. Just all this liquidity. That was liquidity. All that's liquidity. All that's liquidity. And all of this, you got all of this sell side liquidity too. Okay. So this was holding right here. This came up. Look at this. Oh my God. This candle went up 236 pip and came right back down 236 pips. That's nasty. Okay. Anyway, on the daily candle, we got a tweezer top and we got a tweezer bottom. Tweeter thumb, tweeter do. What are you gonna do? Okay, so this right here is really a no trade, to be honest with you. It's really a no trade. I would not take that trade. I would have shorted it up here. I would have took the buy up here, different story. But right now, if I was to pick, I'd be looking at bearish only because of euro and NCD. So I'm thinking euro and pound is going to be weaker. So it's going to be more about those two currencies weakened than it is about NCD being strong. Okay, so I think this got a little bit more coming down. We're talking about maybe about another 197 pips. If you want to scalp that light, put a light trade on there. But I don't think it's going to go any lower than this area here. I don't think it's going to go any lower before we come back up. So short term, it's actually an ugly trade. I wouldn't recommend to trade it, but if you have to, you want to play with it, you're bored, you got nothing else to do, and you need to push a button, put a light trade on this one. Sure, go for it. Pound and CD and looking for a little bit of maybe bearishness, but if a kill comes here, then I'll be ready to buy it. Okay, and come back up here. Okay, all right, that's NCD, pound NCD, euro pound. Let's look at euro pound one more. I like this one, where it's at. Nice. That's a nice little imbalance there for those who like to trade euro pound. This was a nice little trade. There is a big imbalance here, so I think this thing got a little bit more downside to go before we come back up. Okay, so this may come up a little bit. It could, not to say it won't, right? But I'm bearish. But right now, not even a good place to trade, to be honest with you. It's right at that 50%, right? So if you see a break below 0.872, then we're going down. Meaning we got to see a candle close. I had some people ask me about this one. So I got to see a candle close below 0.872. If I don't, then we're going to see a probably slight rejection. So in other words, it could look like this. Okay, so this is going to be range bound. It could be range bound around this area, but this is not a good place to short right here at the bottom. This is, to me, this is a low. This is a low. This is a low, but this is a swing high. This is a swing low of this pair. I hope that makes sense for you guys. If you guys been in my course, then you guys would know. If you'd like to be in my course, you can feel free to sign up. But this would be the swing low. This would be the swing high. This is the premium of this area. This is the discounted area. This is all anywhere in here. You would be shorting the hell out of this thing. If not, that's all right. We got an imbalance here. That's going to come back and mitigate. It may do that this week and then come back down. But we got an imbalance here that definitely would be mitigated. So it can come down here either way. So you're looking for a break of this, for this to happen. Scenario number one, and you're looking for a rejection at this particular area of 0.872 for scenario number two to happen. I hope that makes sense. Scenario number one, a break of 0.872 to go down to 0.8618. Scenario number two, rejection at 0.8721 for a touch of the mid-level of this imbalance of 0.8826 before it comes back down to an ultimate target. This is the ultimate target right here, POI right here. This is my point of interest here. Okay. This is my point of interest right here. This is where I want to see it. I hope that makes a lot of sense for you guys. You can put that into your trade plan. Real quick, just note a couple of things. Just on this volume profile, we have this outside point value here that it can come back and mitigate around here with this order block, but we're right at the point of control. You see that little reaction, this yellow line right here is a point of control. Let me highlight that so that you can make sure instead of squinting your eyes right here, we got a point of control block there. And then we got an outer limit. And we got an outer limit, meaning point of control is where it always comes down to. If it comes up, it's going to come down. If it drops below that point of control, then we're going to come to this other outer value, right? If it peaks out, it can come back and retest and come back down, and this basically resets. Hope that makes sense. Okay. If you want to know more about point volume profile, please come to our coaching class. We use this. It's also a part of our Confluence. It's a really easy, simple thing to use. It's a weak tool, but a lot of people trade it only. It uses volume, but I use it for Confluence. Okay, that's euro pound. There is one trade in the ranging pairs that I do like, and I'm only going to cover it this one time. Cash Swiss French is my ultimate trade of the month in the quarter. And I hope you traded this. Put this down. So this went up here, and then it came all the way down. Don't that sucks? So if anybody went long, right here when I called it, you probably broke even, or if not, you're underwater. Here's a very, very important point right here. When I had called this out, and this is where it becomes, this is when you know you could be a trader. Did you take another buy trade to go long? Did your brave soul give you an opportunity to see this as, and after we did this full analysis on cash switch French, knowing that there's key imbalances here, and this was a key order block, we got another major order block here. Did you take another trade? And if you did, you're under money with that trade by 98 pips. Congratulations. And if you took the trade like about right here, you're at break even on trade number 2. I hope that makes sense. If you took a long here, trade number 1, and it went up, and it did go up, this didn't go up further enough, but say like it went up around 105 pips, which I probably would have took trade profit. If not, I would definitely move my stop loss. But just like I said, you fell asleep or wasn't paying attention, you let this thing go against you. And it went against you, and then did you take another trade in this area where there was a lot of liquidity? This is trade number 2. Okay, well, that's a question you're going to have to ask, but I can tell you this trade is not over. It's just beginning. 243 pips coming. Now, very, very important for all my coaching students and for those who trade with me. Do we have a confirmation? First leg. What's this, folks? What letter is that? Yes, sir. W for a win. Let's go. Okay. So hey, don't be afraid also. This plays like this. Now, last point before I close this up, give you guys a little coaching tip for those who are watching the call. This is Cash Chef. We've been talking about what currency of the two. Thank you. What's coming up this week? Thank you. What's to watch for? Thank you. What are we thinking this is going to happen? Strength. And what happened when the base currency is stronger than the quote currency? We get an uptrend. Okay, if the base currency is stronger than the core currency, Forex 101, that's just what we teach in my course. You should know that. Can you believe you have to know that to really get to understand this? And that was 101. Everything you do over here is 102, 103, advanced, whatever, 104, of course. All right, so this is more to come. Trade's not over yet. Let's give you a second opportunity. You can still get into a long. This is a good place to get into a long. If you're in a long, hold it, get another one. Hope you got another one. If you didn't, you'll break even. We're looking at about 170, and then we're going to get up to about, yeah, we'll probably get over there up here. Come on, cash strength. I'm counting on you, Canadians. I'm counting on you, Canadian. Come on, Mr. Mackham. Let's go, buddy. My Canadian neighbors, let's do it. Folks, it's such a pleasure. Hope you guys enjoy this. Hope you guys took some educational tip. Hope you guys understood how we do this and how we trade this and how we're going to get ready to get out the market. Please allow Sunday and Monday to develop. If you're into trades, if you're not into trades, get ready to manage your trades, get your trade plan together. And all your coaching students, I'll see you guys on Tuesday for our live trade room session. Please email customer service to get that link. Wednesday is invited for all of our members, subscribers, and easy triple dot users as well. You guys enjoy the rest of your Sunday. My 49ers, my wife's 49er fans are playing this today against the Cowboys. So I'm not a 49er fan, but because of my wife, I'm rooting for 49ers out of the West Coast, California. Awesome. Go 49ers. Other than that, you guys enjoy your day. Thank you for coming.